going on, guys? I am excited to be back with you guys. We're back in the market. Everyone's returning from the early holidays with the Christmas break, and then of course we'll have another break pretty soon. So really excited for this week, seeing how things have been going, and let's jump right into it, guys. So. Starting things off, let's look at how the market has been performing. Let me open a separate tab here so we can take a peek at that. So today we had the Dow gap up, run higher, 200 points into the day, 200 points higher. We had the Nasdaq in the day about 100 points higher. The S&P ended about 32 points higher. So all green across the board. We've got half of stocks in the market. Looks like they between the New York Stock Exchange, NASDAQ, and the Amex, looks like about half were advancing and about half were declining. New highs, 93% of those stocks made new highs in those indexes, above the averages. And the market overall was, looks like people selected a bullish sentiment for today's market. 80% of the market suggested that. So pretty awesome. You can see right here from our map, a lot of stocks, the big heavy names were ended the day green, did very well, so that's good. This is all connected to stimulus being approved and signed by Trump. Stocks pointed to gains after Trump signs $900 billion economic aid package. And of course, the GOP is meeting right now on the floor, voting on the additional the increase in the stimulus check amount to $2,000 from $600. Not sure if that's going to pass or not, but we'll see what happens. So to cover the indexes really quick, the Dow Jones, as you saw just now, is looking good. It ended the day at a record high, but still got some room to go before it really breaks above that level and separates itself. S&P did well, NASDAQ did well. So all of these things are still in a very nice bullish uptrend. They have not curled over yet, right? Even the Russell looks like it's presenting some candles. Looks like it wants to, drop a little bit lower, but we'll see how it performs. The VIX is decreasing, and that is a measure of volatility. So the fact that it is going lower and lower and lower means that the market is starting to stable out. So that's the condition of the market overall. There's a couple of stocks that we are looking at, okay? There's a couple of stocks that we are looking at. Actually, let's take a look at, before we jump into that, performance on the week for our sectors. Top performance sector this week, of course, has been technology. They've been strong for the past year, especially after COVID. Finance looks like it's starting to rebound this week, making a move back to those pre-COVID levels. So that's awesome. Real estate is starting to rebound. So these are a couple that got crushed by COVID and are steadily climbing back up. They didn't have as much of a rebound as technology and consumer cyclical, some of those other sectors, but they are starting to approach those pre-COVID levels for a potential test of that level and then a breakout. So we're watching that. Communication services, industrials, all of these stocks look like they were doing well this week. And then in regards to the year, we've got our same industries that have been sectors that have been doing really well: technology, consumer, communications, basic materials, those guys. Healthcare still crushing it. Healthcare looks like it's curling over a little bit, but we'll watch it to see what happens. All right, so the stocks that we are watching. So I pulled these up to analyze the chart. The first one I pulled up was SPWH. This is actually the best one out of all 5 charts that I pulled up for potential breakouts. It recently gapped up to this 1790 level. And then if we need to figure out why, we can always go to the news and see what happened. Looks like something regarding the investigation reeled in by Bass Pro owner. So that's big. Acquisition by Great American. So looks like there was an acquisition somewhere in here on that December 27th date, and that's what propelled the stock higher. Hasn't pulled back since. It's stayed up there at that $17 area. And so what we're looking at is a potential break above this level right here, $18 essentially. right about here. You can see the stock is running into trouble right at that level. So on the daily chart, we see that confirmation. We go over to the weekly chart, we see the same confirmation. That $18 level is the critical level. And then on the monthly chart, the wicks right here are the previous, are where the stock broke out to and then got pulled back, and so it's retesting that level at the wicks. So I usually like the body of the candle, but this is also confirmation. You can see the wicks ended right there at that $18 level and got pulled back down aggressively. So the fact that there's finally a candle that shows a strong body above that level or near that level is, looks really good. So this stock looks the best. Has a nice chart perspective, a chart set up there. It's in a strong industry. I think the second strongest sector, second strongest sector in the market right now. And there are a lot of other things that we really liked about it. The float is below 50 million. Volume looks good. Average volume is above a million. It did 2 times that amount today in today's trade in session. ATR is close to $1, so you can expect, a nice move. If it breaks out, you can anticipate what's happening there. Earnings quarter over quarter, earnings per share, sales look good quarter over quarter. So there are a lot of things that look good. You see this uptrend right here on sales over the past 5 years. There's been a slight downtrend, a decline in earnings per share over the past years, but looks like it had a massive year this year, quarter over quarter. So we'll see what that final number looks like this year once they report earnings soon. So this one looked really good. Looks really good. So we're watching this one. ZIXI also looked pretty good. On the daily chart, it's above its primary levels. Primary resistance level was probably somewhere back here at $7.71. And then as you can see, once it broke above that level, that's when it had a nice breakout right here, strongest breakout on its entire chart. So, that was clearly the level. On the weekly chart, the level is $8.99, which basically is $9 right there. Tap right here, tap right here, tap right here, where it is right now, running into trouble. And you can see it used that area as support once it had a really aggressive breakout of that level in the past. And so clearly this $9 level is the primary level for this stock. And then the fact that it broke out of this level before gives you a clear area of where you should expect resistance in the future and what your profit target can be. So you see right here that $9.98 level, basically $1 away from where it is right now, is where it ran into trouble previously. And so that would be an area where you watch closely to either take profit or just examine it, see if it can actually break through that level this time. So $9 on the weekly chart. On the monthly chart, you see right here is really the level at the body of the top of these candles. Tap, tap, tap. Finally broke out a little bit, got pulled all the way back down, and it got pulled back down aggressively. The wick came right here to this $9 level. So on 2 time frames, the weekly and the monthly, that $9 level is the primary confirmation level. And so that's the level where you'd be looking for a breakout. And then you can see the wicks over here went to that $10 level as well. And so the more levels that we can get confirmation on, the better. In this case, we get 2 time frames with confirmation. The float size is above 50 million. So that's still good. It's about average. I look for stocks below 100 million. So 50 is right in the middle. RSI is a little overextended, but we'll see. The ATR wasn't great, 37 cents. Was pretty bad. Let's see, institutional insider ownership was low. And then sales was, just okay. So we actually are deciding not to trade this stock. And there's a number of reasons why. 2019, we had this dramatic drop in earnings per share. And then also this company has heavy debt, has a good amount of debt over there in the corner, as you can see. We don't have a price to earnings ratio there. So there's a lot of things that are missing on this stock. ATR typically moves about 37 cents each day. So there's not a lot of room for profit or movement in that range. So there's a lot of things, a lot of reasons why we've decided not to take this trade in the future, even though the setup looks pretty decent for a breakout. Not saying that it can't break out. We're just saying we're going to manage risk and avoid this one for that reason. it is in the strongest sector in the market in technology, but there's a number of other things. Earnings this year being negative, um, earnings per share this year being negative, a lot of other things that did not look too good for this particular stock. So we disregarded that one. I'll just go straight to the next best one, which is STRL. So STRL looks, whoops, let's get back to it. Let's go to the daily chart, see how many levels of confirmation we could get. I think we only got one. So right here on the daily chart, there's been a steady uptrend. You guys can see it right here. It's just been going straight up, as you can see. So that is good, but that doesn't give us a defined level. That gives us a sort of uptrending channel that we can watch, but it doesn't give us a defined level, a stable level for a breakout. So the daily chart, I couldn't use that. The weekly chart, it looks like it broke out of the level. The level was somewhere around $17 right here. You can see the confirmation from the tap here, tap here, tap here, and then finally, once it got above that level, it had an aggressive green bullish candle. And so that was the level on the weekly chart, but we missed it. And then on the monthly chart, it looks like it's pretty close. It's right here at $20. You can see there's, when it opened up, it opened around that range of $20. Tried to break out the next month and then just got pulled back down in the consecutive months and had a ton of months where it tried to get above that candle. Couldn't even get a body close to it for a while. And then finally it got its body close to it and then got rejected aggressively and never recovered back to that level. And so finally, after a very steep uptrend this year on the monthly chart, it has a body again at that level and had a wick break above that level. And so, on the monthly chart, it presents a breakout above $20, but this may be extended because you can see how many times it's been aggressively pulled back every time it got close to that $20 level. So in order to break out of that, it's got to have some good, really good fundamentals, a good story, good things happening for it that makes it a stronger candidate for a breakout than back in 2009. So some of the things we looked at, of course, we always look at the float. It's a low float, below 50 million, so that's awesome. ATR is close to $1, so there's some room for profit in there. Our relative volume, average volume is usually around 300,000 shares traded, so that's not awesome. That's one of the things that would be called a detractor, which means that's taken away from the stock's overall score. Doesn't make it an ideal candidate for that reason. But there's other things that look good about this particular stock. Insider ownership is not high. Insider transactions doesn't look like there's been any movement. So the insiders that are holding are still holding, and the insiders that have stayed out are still out. So institutional ownership last quarter looks like it was heavily owned by institutions. So that's one of the things that when you have a major resistance level that's been very strong, and you don't have other confirmation on other time frames, that can lead to institutions and big money and smart money selling at this critical level because they've been in profit since the middle or beginning of this year. They've been in a great situation, incredible gains on this name. So that can lead to them deciding this is a good place to get out. And so we can start to see some harsh selling soon, or if this company can figure out something good to say, they can, encourage smart money to buy the stock through that level. The price to earnings looks good. Debt does not look good. Earnings per share quarter over quarter looks good. Sales quarter over quarter looks good. And you can see for the past year, they've actually been increasing their sales. So that's a nice upward staircase. Earnings per share were horrible back in 2015. They started to pick it up in 2016 and then started to go higher and higher. And then I imagine for the 2020 slot, they most likely have an improvement even from this level. So, the story from this stock right here in this area says that this is a company that is figuring it out. They are piecing it together and they are rebuilding and growing stronger. Maybe something happened in management. Maybe something happened with just the overall market conditions that the economy that allows them to be more profitable now. But they are starting to figure it out, and that's good. Okay. So this one looks good for a potential trade. It's not as strong as SPWH. That will be our primary watcher. But this one will be on watch as well for that break of 20, and we'll just see what happens. This just means the fact that there's not a ton of confirmation at this level is only confirmation on the monthly chart, and it got rejected so many times on the monthly chart before, and now it's trying again after a steep uptrend without any pullbacks, means that we need to be really careful at this level. And so we'll watch it, tight stops, things like that. So that's the STRL situation that we're looking at. So just two more here. SMPL we looked at yesterday. This one did not run as well as we wanted it to, but you were still green on the day if you traded this stock, as we mentioned, above that break of $30. It ran up to $30.28. Actually, it ran all the way up to $30.75, and then ended the day a little bit lower at $30.28. So still green on the day. You can see it's had its highest volume candle today that it's had in the past, like all year. Let's see the weekly chart. Yep. And its history. Today was the largest amount of volume that it's had in its history. And so, this was an important level. That $30 level was an incredibly important level. And when it broke above that today, it took a lot of volume just to get it above that level. Like, it didn't even break out yet. It's just hovering at that $30 level. And it took that much volume, the most volume in its entire history, in order to get it above that level. So that's important. That speaks to confirmation of that level. And then we can see on the weekly time frame, $30 was the primary area, ran right into resistance right here at $30.25, and that's where it ended today. So it still has a little bit of room to get above that before it can really run. And on the monthly chart, same story right there at $30. So this one is excellent for another potential trade. But if you got in at the $30 mark, just hold on to it. You haven't hit your target yet. This one is a good one to keep for a swing. And then the other one is LAKE. We had this on the watch recently last week. I actually won't talk about it today, but it is doing incredibly well. Tapped above $30 today. And we were looking at it all the way back at, this break of $26. That was the primary level. I think it was actually probably $25 more so actually. Let me take a peek at this. 20. Yeah, I think it was actually 25. It was somewhere around here. So, if you held on to this, you'd have about $4.60 in gains today, potentially, somewhere around that. So this was an excellent trade, and we're looking to find more trades like that. So that's the recap for today, guys. Safe trading out there, manage your risk, be careful. The market is volatile due to the news, end of the year, all kinds of different reasons why you guys should be safer. All right, we will see you next time. Take care.